Welcome everybody. How we doing? Uh yeah, Ricky. I mean, technically speaking, yes, but we are not. We are going to talk Apple a little bit today just because I saw somebody talking about it, but that's not really what we're talking. But that's the problem. So people don't understand like what blue chips are, For the most part, when anybody thinks of blue chips these days, it's going to be those Apple, Amazon, I mean, even Google, Microsoft, household names. But really a blue chip stock is just a safe old company. They aren't going to put, like they aren't going to put something like, Rivian or Upstart into the blue chip category. It's going to be household names. Johnson and Johnson, Procter and Gamble, shocker, one we're going to talk tonight, AT&T, one of the more classic blue chip stocks around. People forget that it's got $100 billion market cap. But yeah, technically speaking, Apple is. But that's not what we're talking tonight. Yeah, SoFi for sure not a blue chip stock. There ain't nothing safe about SoFi. Yeah, Narvin, we will not be discussing IWM, SMCI, RMBS tonight. None of the above. Yeah, that's a post that's going around 1K. It's and that post is for sure not accurate. He did yeah, we aren't really going over Spire QQQ tonight either, Norman. Hate to tell you. Buffett did sell some. Um, but dude, he like people dramatically underestimate his position size. And he holds a lot of those stocks. He did sell, I mean, it was like 7 billion, 6 billion. I don't remember what the story is, 6 billion or something, but I'm almost positive he didn't get fully out of them. I'm pretty sure that he did get all the way. He might have got all the way out of Johnson and Johnson, but most people have been long out of Johnson and Johnson. It was just, and we're gonna actually talk it today because it's something I love. But man, like this, it's Johnson and Johnson just has not been able to get like its feet under itself. It is crazy because dude, they own so much stuff. But this was just a long hold for not very much gain. They do have, uh, they do have, a decent dividend. I don't remember what it is, 2-3%, something like that. So they do have a decent dividend on it, but it's just kind of becoming one of those like, don't like, you don't like, you don't want to hold these things forever and make nothing. Because Buffett was in, I'm just going to look it up and see if he's still in, because I know that he sold a lot of it. I don't know, maybe 10 years ago. Buffett, Johnson history. Oh yeah, he sold most of his holdings back in 2012, and he sold his remaining 327,000 shares. So he's he's out of that one. Yeah, Burry's in chip shorts. The dude's an idiot. The poor guy is like, the poor guy is just terrible. But yeah, we'll see. I do have to go and read, if he actually did sell all of it, but yep, we'll see what happens. Yep, poor Burry and chip shorts. He's an idiot. Oh, we got a question. Membership questions got to go to uh no, Norbert, I told you as soon as I saw your name, no SMCI tonight. Um uh for any renewal questions, you got to go to MMA. Typical rule is no refunds, though, I'll tell you right now. However, with the sale coming, we could see what happens. What, you want to see where you were telling us to buy, Narvin? Yes. This is where Narvin told us to buy SMCI. This is where and we told him he was psycho. To be technical, Narvin told us to buy SMCI like right about here. And then it proceeded to drop like, 15, 20%. This was Norvin's entry. Right about here was where Norvin decided to short the whole market. Then the rest of the market ripped and Norvin was short. Yeah, no SMCI. Welcome everybody. How we doing? We'll give it a few more minutes. Not sure how many folks we're gonna get tonight. We'll see. Most folks, they don't want safe, you know, they want them quick gains. Look at that, Narvin, though. You're getting a breakout. Man, I hate reading trading psychology people. Mark Douglas is good. There's this other one, I forget. The Mental Game of Trading or something, I think is what it's called. That was another good one. There's another guy that like, so I'm gonna say he's good. I'm gonna say he's good, but only, and I actually talked about him in my tab the other day. Only listen to his trading psychology stuff. He is an absolutely terrible trader. His trading psychology stuff is very good, but I repeat, he is a horrible trader. And that's trader Tom Haugard or something like that. He has another book. I haven't read it. I don't really like the guy, but he does do a very good job on trading psychology stuff and teaching it. He's just unfortunately a horrible trader, so it's hard to listen to people like that. Wow, Penn is breaking out. Holy, that's insane. I never thought I'd see that. Yeah, it's still not looking good, huh? Wow, Penn. I mean, huge breakout. It is well beyond breaking out, I would say, you know, at this point. Thing is broke out. Does Mike watch ICT? No, thankfully. I mean, he would never understand it though. Most people don't understand it. It's garbage. ICT is garbage, you know. So but yeah, Mike's got no business on ICT stuff, that's for sure. Most people got no business. How's everybody doing tonight? Hope we had a good day in the market. Yeah, trading in the zone's great. Mark Douglas is awesome. Got a feeling we're gonna have pretty low attendance, you know, typically a pretty quiet week around here, Thanksgiving week. So we'll see what happens. Oh, Nvidia beat or miss, man. That's like not even joking, the $1 million question. Uh things just setting new all-time highs again. It's hard to say. I mean, there's no telling. Like I read, I mean, uh there you go. I read the previous Nvidia report, this one back here. It was insane. Then their guidance was absolutely insane, and they somehow like met and beat it on the last one. However, this one, and don't quote me on these numbers, the guidance here was like they guided for I think 7 billion over the quarter from 4 billion. And then they did it, you know, and so they beat, and I had that nice, you know, big push up, whatever that was, got, you know, 10%, 15% push off of that earnings. Well, when they guided this quarter, I don't remember again the exact number, so I'm going to go with like 15 billion, but they went from 4 billion to 7 billion to the next one is they want to do 15 billion. And I don't see how that is possible, you know, to double the sales. And especially when like Nvidia chips, like you can kind of just go buy them now. There isn't the you know, there isn't the you know, no waiting around for them. You can just kind of go buy them. So there's not that like, you know, lack of product or anything. So I'll be curious to see what happens. Yeah, there you go, Crash. Nice slow mover. That's right in your wheelhouse. Okay, well, with that, we're going to stop talking NVIDIA and we are going to start going to basically the opposite end of the spectrum. And so tonight we're talking boomer stocks, blue chip stocks, not the big name blue chip stocks. We were talking kind of in the beginning in here, somebody asked about Apple, and yes, technically speaking, you know, Apple, Amazon, Google, Microsoft, those are all in my opinion and most people's opinion now, blue chip stocks. You know, some of them give dividends, they're household names. They aren't, oh my God, Rev, thank you for the food update, dude. I love those. I look forward to that. So they aren't, you know, they are blue chip stocks. They are not what we're talking tonight. You know, blue chip stocks, some people kind of use it interchangeably with the boomer stocks. They move slow, they're household names, they've been around forever. they have what's, and we aren't really going to get into this, but they have what's known as low beta. So it really helps with super cheap contracts, slow movers, reasonable prices. And because of all of that, we're as day traders, or even, a lot of these are, most of I don't really like to swing trade actual positions as much as speculative stuff. But a lot of these blue chip stocks can be very, very great for swing trades because it's not going to be something like those fast movers, your AMDs, your Amazons, your Nvidias, none of that. You aren't going to get destroyed, and that's going to be that's one of the yeah, that's one of the big advantages to them is like, if the trade doesn't going to go your way, you're going to wake up to minus, 15 or 20%. You're basically going to be able to stop out at your planned stop out anyway, as long as you're building a nice trade plan on them. And so they just offer a much safer thing to trade. You aren't going to see people posting 1,000% gains on the things that we're talking about tonight, but most of these equities that we're going to talk will offer a 15, 20, 30% trade every single day. I wish more people would trade them. I mean, a lot of you guys have seen I trade SPY. I've been scalping SPY on and off for 5 years, trading it longer than that. I traded shares of it for a while. And so, I like SPY. I understand SPY. So I do trade it a lot. But there is, 4 out of 5 days on the week, I am taking a trade on one of these slower moving things. They're a really nice way to pad the port. They give you very safe gains. I'm not telling you to go YOLO them. In fact, the volume typically will not even allow a YOLO on them. It's not something you want to do. But they're just nice, safe gains, minimal losses, nice returns on them. And like I said, something I love to trade. And so what we're going to talk tonight, and I actually kind of messed up. I meant to share my screen so that I could pull up the option chart, or the option chain rather, because something that when you are trading these things, these slower movers, these, theoretically safer things, you need to understand how option contracts move a little bit better. On something like, the big names people trade, the Microsoft, Tesla, the fast movers, you can pretty safely go, I don't want to say safely, but like reasonably go out of the money because they might move $1 or they might move $2, and so your out of the money strike isn't nearly as unreasonable as it would be on something like these. But because of kind of going back to what I was talking about earlier, low beta, slower movers, extremely low IV, at the money contracts, even in the money contracts, you'll see I recommend on some of them, are cheap and very, very safe. A lot of people have no idea how option contracts work. So we're going to this is going to start with just a crash course in options Greeks. I'm going to keep it simple. We aren't so much going to discuss the math. We're just going to understand what those Greeks mean. And so when I am entering any trade, I like the Greeks because it's where, as option traders, as derivative traders, we're able to kind of, fudge with the market a little bit and take advantage of some of these things that are, maybe cheaper, but have a high delta so that we can get a nice move on them and keep it relatively safe. And so something that I am always going to look at, and I'm going to keep the chat open. So if I'm going too fast and you have questions about any of the Greeks as I talk about them, type it and hopefully I will respond to it. So the first one we're going to talk about is delta. What delta tells us is for every $1 that the stock moves, that is how much money our option contract is going to gain in value. Again, going back to these cheaper things, one of the great advantages of the cheaper stocks and the low beta stocks is that the delta is going to be, until you get to same days, of course, extremely accurate. So when you are planning a trade, you're able to kind of say, hey, I want to sell here. And maybe that's 30 cents away on the stock. And so if you have 50 delta, or 60 delta, and you're 30 cents away, you know that you are going to get about 1/3 of that delta. So you'll make 20 bucks of the 60 available on a $1 move. So great thing to always watch. The next one is theta. You know, it's day traders kind of arch enemy, especially if you're into trading shorter dated contracts, weeklies or same days or whatever it is. Theta is the enemy. It is how much contract or how much value your contract will lose over a 24-hour period. So when we look at, you know, depending on what you're looking at, but if you got like a week of time, you might be looking at 15, 20 delta or theta on some of these cheaper equities. And so what that means is if the stock does not move even 1 penny throughout a 24-hour period, you are going to lose whatever the theta is in value. And so theta is just the time decay is what they call it. And it is your contract losing value based on the amount of time you hold it, you know? So that's why something that we talk about all the time in here, you know, just to go back to like, you know, a fast mover, something like Tesla, you might have a $250 or $200 contract. And then when you swing it overnight, you might be looking at 50 theta on it. So if you enter that contract in the afternoon and you're swinging it till the next day, you will guaranteed lose $60 or whatever it is in value. Well, that's when you need to look at your delta. And so on something like Tesla, you might have 60 theta, but you might only have 30 delta. So you will need a $2 move in your direction just to be break even on the contract. So it's always really, really important to take note of those when you're entering any trade. On these cheaper ones, as I had hinted at earlier, you can play at the money, you can play in the money, and in the money will give you a very, very great advantage. You know, it's not something that you always want to do. I'm not saying go buy in the money contracts on, you know, Tesla or anything like that. I think that's a death wish for most people. But on these cheaper, slower movers, you can get an in the money contract. And what an in the money contract has, it's known as intrinsic value. There is, you know, when your option contract is out of the money, when it expires, it goes worthless. When there is intrinsic value, that means that there is actual value there. So if you were to, you know, and again, this is getting a little technical, but if you were to exercise that option contract and take the 100 shares that you are allowed to take, you know, based on the contract you're in, you will make money on those shares. That is what being in the money means, you know? So if you have a contract that is $1 in the money, it will always be worth $100. Because if you were to, you know, exercise that option contract, like if you have some 450 SPY calls and it is at 451, if you exercise that contract, you make basically $1 per share that you are in. So you make $100. That's what intrinsic value is. And it also gives us a little bit of benefit. And this is going to be the last thing that we're going to talk on the Greeks. We've covered the major ones. Now we're going to get into actually talking about trading some of these things. So when you go to trade something, one of the bigger advantages to being in the money is you increase delta. The deeper in the money you are, the higher your delta will go, all the way up to 100, you know, because you're, you know, at 100, you are making $1 per share that the contract represents per dollar that it moves. So you make $100 every time the stock moves. You know, you make $100 every time the stock moves in your direction, or you lose $100 when the stock moves against you, you know? And yeah, exactly, Rev. And so on something like, and when I'm going over these stocks that I'm talking tonight, I'm going to kind of start with extremely cheap, and then we're going to go to pretty cheap, medium cheap, and then actually, I don't want to say expensive, but slightly more expensive. And so with that, we will get into it. I want to see. Oh yeah, the spreads can be tricky, and I'm going to talk about that. That's going to kind of go into it as we're talking these tradings. So Crimson, that's a very loaded question. It depends what you're trying to do. Stacking delta, at least that's what I refer to it as, you know, getting more contracts that are out of the money can be very beneficial. It can also blow your port in a hurry. And so, you know, that's, you know, we aren't talking that tonight. That is a much more advanced form of trading. 99% of people should be trading at the money contracts, not going out of the money, especially if you don't have a pretty deep understanding of how option contracts move. But so we're going to look at AT&T. Let's see, I got a question. Can Delta move higher in your favor? The stock gets a lot of volume due to news or popularity. No, but IV on your contract can increase, which will increase value. However, and this is not something that like so this is getting extremely deep into option Greeks, but Vega, it's another one of the Greeks. It will actually, or I'm sorry, Gamma, it's another one of the Greeks, is actually one that Gamma tells you the amount your delta will increase per $1 the stock moves. So just as an example, I'm looking at an AT&T contract right now because we're going to talk AT&T here in just a second. It has a 57 gamma. So that, or the one strike out of the money has a 57 gamma. So we know that if the stock moves $1 in our favor, our 10 delta will turn into 67 delta. So if you want to understand, it's known as gamma shift, you know, the gamma shifting into the delta and increasing the value. That's what you read. You read how gamma affects delta, and it works both ways. You know, if it moves against you, your delta decreases as well. But that's getting a little more advanced than we need to get. So we're going to talk my favorite blue chip stock to trade, favorite boomer stock that there is. I trade this thing multiple times a week. It can pay very, very well. You will typically have an extremely tiny risk on it. I'm talking $1 to $2 a contract will frequently be my stop out level. And so it's something I love to trade. So I'm going to treat it like anything else that I want to be trading. Big level right here. Obviously, I have that 200 SMA above us. And then I just want to mark major highs and I want to mark major lows anywhere around where we are trading. And so we got a couple good levels here. Only other things I want to take note of, any sort of, are we trending up, are we trending down? We've obviously broken out of this big downtrend, so we aren't going to look back here, looking at AT&T. So we got a few levels on there. We know where we might want to, look for pullbacks to enter, things to short to. And so we're just going to look at AT&T like this. We aren't going to do indicators. We aren't doing any of that. We're discussing how we might change or might trade some of these, cheaper, slower moving stocks. So we can see, I just want to kind of bring us in and look at these levels. When you're trading these kinds of things, I want to point out, this looks like AT&T had an awesome day, and it did. It had a 1.25% day. It was up for most of the day, However, it was only 20 cents. We're up 20 cents on the day. So we went from basically 1590 to 1610. I mean, we take that nice push up and then pull back. But 1590 to 1610, we basically moved 20 cents. So this is where a lot of people have problems trading these. They will see this and they'll say to themselves, like AT&T puts in big moves, I want to go out of the money. And that is where the problem arises. You don't want to be out of the money when you're trading something like these stocks. You want to play in the money. And why you want to play in the money is due to that increased delta. If we can look at it today and say, today's kind of a tricky one because we were close enough to 8 cents away to play it. However, typically when I play these kinds of things, I'm going to play in the money. And I do that for the exact same reasons we talked about. The safety of I will always have intrinsic value, as well as the dramatically increased delta. And so when we trade something like this, if we go out of the money, we might only have 10 delta on the trade. So if we get a 20-cent move, we know that that is 1/5 of the delta, and it will only pay us $2, $3, something like that. However, with something like AT&T, and I'm looking at the contracts right now, the out of the money contract has 10 delta. The in the money contract, well, now after the move today has 87 delta, but started around 60 delta. So we could have purchased the in the money contract for 50 bucks, had the safety of knowing that it is going to continue to be worth $50 due to the intrinsic value. And then because it has 70 delta and we know that we're going to get 1/5 of that move, each of those contracts is going to pay us, give or take, I'm rounding, but 15 bucks. So when you have your $50 contract that is basically never going to go below 50 unless it goes out of the money, and that's where you stop out, you can end up getting a 30% return, a little bit more on your money. So your $50 contract turns into a $65, $70 contract on a very small move. We also know when we purchased it, and we could even pull up this option chart next to us, might as well look at it. When we purchased it, we would have been purchasing the 15.5 calls. And so when we would have purchased these calls, we can now look at the option chart. You can see there's not a ton of volume on these things. You'll get weird choppy things. These contracts are even better than I would have expected. The low of the day on these during this chop down here was $40. So, nice cheap entry. We know that if we enter it down here, you can see that the contracts are basically in a $2 range, $2 to $3 range. We know our stop out is a close below any of these wicks. We're literally risking 2 to 3 cents of downside. So we would have been risking $2 to $3 on this contract. Even if we waited to up here for this nice breakout retest here, we would have ended up risking $4 on the contract to where our stop out was. However, we get a nice move. So when we and like we said, this is a nice move, 1% day. It's only a 20-cent move on the equity. This actually, in the end, ended up paying us over 50% on those contracts on a 20-cent move. So our risk would have ended up being $4. Our reward ended up being $20. So it worked itself out to a 1 risk 5 reward trade, which is it's a no-brainer. You take that trade every single day if you can. AT&T is not always going to put in a straight up move. A lot of the time it will do a nice move early and consolidate. That's a very common thing for these things to do. However, you can see just from these levels we put on here, they typically trade very, very technically, because they're an extremely high float stock. It's weird to think, but AT&T is trading at $16 a share. It's also a $120 billion company. People don't realize that. So there's just a lot of shares being traded out there. However, they trade very, very technically. And as you can see, 20-cent move on the equity. And even we were 40 cents in the money here. That's why it's $40. So we were 40 cents in the money here. We know that basically every 2 to 3 cents that it drops, we lose $1. So it's a very, very safe thing to trade. Something that I will almost always play in the money just to kind of get that nice value. Today is a day where honestly, if we pull up these 16s, they likely went insane because they went from out of the money to in the money. So you can see on these, much higher risk trade if you were to take it. Would have got the fill down here somewhere around 8 cents, ideally, if we waited for our breakout here, somewhere 8, 9 cents, and ends up pushing at 23 cents. 200% return, awesome return, not going to be the normal on something like AT&T. So this was just a day where it worked out very nice, but also kind of shows the power of what these boomer stocks can do. So that's my first one. And so as I said, we won't be pulling up the option contracts like that every time. From here on out, we're going to kind of be developing trade plans on some of these. Again, if I'm ever going too fast, try to, tell me I'm going too fast and ask some questions. But AT&T, first one, super cheap, extremely affordable. Very, very cheap weekly contracts. Even if you want a little bit more time, like we looked at those, the weekly 16s were $8. The next week 16s were like $12, something like that. So very, very cheap. Next one we're going to talk about, Pfizer. So this one's kind of that middle of the road, getting to be slightly more expensive, used to be much more expensive. But another great one to trade. It will, generally speaking, make slightly larger moves than AT&T, because it's $30 a share. So it's easier to move something that costs $30 a share up, 10, 20, 30% than it is something that costs $14 a share, $16 a share. So we're going to do the same thing on Pfizer. Pfizer's actually been paying very, very well in recent times, very easy short. Shorting all pops has worked. So that's basically what I've been looking at. However, when I was getting ready for this lecture, I did want to note that Pfizer is doing something pretty interesting right here. And something that I will always, pay attention to myself. When we get multiple inside day candles like this, where, basically the entire candle fell within the body of this candle, this will give us a very nice range to play off. Whether we play the breakout or we play the breakdown, we have this nice area right here to try to trade from. We got the SMA line, the 20 SMA on the daily lining up with it really nice. We also have a very big trend, but we have a nice little wedge forming right here. I don't like naming anything's not bullish, not bearish. Don't care if it goes up or down. I will trade whatever way it comes. But when we have a setup like this, where we have SMAs, trends, levels all on both sides, and we're sandwiched between them, there is a pretty good chance that it is going to make a nice move sooner than later. Again, it's going to be like any of the other boomer stocks, not super huge move, not super fast move, but it's offering us a great place to trade. The other thing that I've been eyeing kind of up here, and it's not a perfect gap because that wick goes all the way through it. However, it ends up offering us some nice targets to work towards. And if we get above them, we know that upward move could come quickly from here. So that's what we're going to look at on Pfizer. You can see kind of just sandwich between the levels for now. That's what we want to watch. However, any breakout above this 30.28 or breakdown below this 29.64, you could even run it to 29.50 for these lows. But that is where I will be watching to trade Pfizer again. 29 was the big hurdle before, and we kind of found ourselves holding above it for now. And so going into tomorrow, we have FOMC minutes. Kind of goes hit or miss. I would say, 60% of the time it means nothing. 40% of the time we get a pretty sweet move. It all depends on if they revise anything that they've said. But offering us a very, very great place to trade. One more thing I'm going to point out, just because we're looking at Pfizer, as I said, these things, a lot of these boomer stocks trade very, very technically. I will always take note of big round numbers. So when we're trading around something like this 30 right here, we know that that is likely going to matter for us. You can see it's where selling was, where they would buy us up to and try to get us, bring it right back down. We know that 30 is going to be important. So if we zoom out again to the daily and kind of look at this going into tomorrow, we'll get the new candle here. Start looking for these trend breaks up or these trend breaks down going into tomorrow. And then, as with all of these, depending on if you're looking for a day trade or more of a swing trade, trying to catch the scalp, I'll be looking to play in the money. If we get the breakout here, those 30 or the 30 strike calls, end of day today, we're trading at $30. Now we can start to analyze the delta and say we have a 30-cent move up minimum that we're looking for to our first profit target. So we get a $30 contract. It has 50 delta, and we'll get basically 30% of that 50 delta. So this 20-cent move on a weekly contract would pay approximately 40% on the contract for a very small move. I will trade it the exact same way on the downside. If we end up breaking down, these 30 strike puts, no shocker because we closed right at 30, are also $30. They are probably sitting 54 delta, slightly higher delta even. And they will play the exact same way. If we break this trend, break below this 30, look for a 20-cent move down, that will pay 30 to 40% on the contract. Pfizer is definitely one I think people should have their eyes on. There is no denying the chart looks horrible. So we aren't looking for some big extended long breakout upside, nothing like that. Looking for scalps to the upside or scalps to the downside to see if we get some continued selling. I know when I looked, I think we are well below them. Yeah. These COVID lows could very well come into play. We'll see. Again, we'll be playing those same levels, looking for those breakouts or breakdowns, and just scalping, just because they're slow movers, maybe not scalping may not be the right word, but day trading them. The contracts pay really nice. There's no reason to swing them overnight. Fine to swing a runner if you think the momentum is in your favor. But Pfizer's setting up to make a really nice move up or down. I could care less which way, sooner than later. Oh, what up, Flips? How we doing? We were talking about things that move way too slow for the likes of you. So Pfizer, that's kind of my slightly, still very cheap, but a little bit more expensive one. Love trading it, trade it all the time. We got a couple people in here that have been trading it too, doing really well. Next one, Coca-Cola. Love trading Coca-Cola. This one is again getting slightly more expensive, trading at $57 or whatever. So this again, just to reiterate the same thing. It is much easier to move a stock from 56.50 to 57.50 than it is for a stock to go from 14.50 to 16.50 or 15.50, something like that. A $1 move is much smaller on something like Coca-Cola than it is on something like AT&T. So Coca-Cola is one that I'm not, I will decide if I'm playing in the money based on where we are trading. So we're going to do the same thing on Coca-Cola. You can see I already got the box drawn on here. This is the no-brainer Coca-Cola trades right here. Anytime we get to the top of this box, we're going to be looking to be short with a very tight stop over it. Anytime we get to the bottom of this box, we're going to be looking long with a stop, just below it. So I'm going to put those on there. And then obviously you always kind of want some sort of a midpoint. And with Coke, we're going to slap it. It's not really going to be the middle, but right around 57, because that is, that's going to be somewhere in the middle. And so super easy trades on Coca-Cola right now. They've been working over and over again. Again, if we do get this breakout, you can obviously play it long. If we do get this breakdown, you can very obviously play it short back down to some of these SMAs, whatever it is. However, on Coca-Cola, I am starting to almost lean towards the breakout side. A lot of this selling, you can see selling after a dividend date. You can also see buying after a dividend date. But a lot of this selling was in relation to all the weight loss, Ozempic stuff, stay away from aspartame, all of that. So some of these very unhealthy food companies were definitely getting beat up a little bit. But so then we go in, we want to look at Coca-Cola, obviously everything's going to look gray because we're on these tighter time, or we're in that range that we've drawn. But when I'm doing contract selection on something like this, I do it in a very simple way. You could definitely get more, technical on how you want to decide what contracts you're going to trade. But basically how I treat it is, so we're between 57 and 58. So if we are between 57 and 57.50, I am playing the 57 in the money contracts. If we get above 57.50, I'm likely going to be looking to play the 58 contracts. However, when you do something like this, you need to have your trade plan laid out. If you are trying to play this breakout up to 58, trading a weekly can carry more risk. If you don't think that it is going to make that move super fast, you will more likely be happier still trading in the money if you're trading a weekly. However, if you're looking for, a next week move or a breakout, that's where you can start to, go to that one strike out of the money. Don't go buy 59 calls on Coca-Cola when it's at 57, 58, because $1.50 move is going to be relatively rare on something like Coca-Cola. So I typically follow that rule. If we're between 57, 57.50, I'm trading in the money. One of the advantages that gives you, again, a super high delta. I'm looking at it right now. The weekly 57 contracts that are in the money were $58, have 75 delta. So if you are to get, a 50-cent move up, which is very easy on Coca-Cola, it does that most days. You'll get a, 30, 40, 50-cent move. Then you're going to end up getting about $40 off of it, which is going to be, 80, 70% on your in the money contract. The other advantage to it is if we're trading 57 calls, it's trading at 57.50. We know we have $50 of intrinsic value. So basically every 2 cents it goes down, the contract is going to lose approximately $1. And so it makes planning your trades very, very easy. Even down here, if we looked at these, if we were buying the 57s right here and we knew we were stopping out on a close below that 57, we understand it's going to be, 10 cents. So we're going to lose $7 according to our theta, or according to our delta. So we can plan our trades so much safer that way. I see you go questions. Oh, you can trade PFV all day long. I mean, it's just like anything else. It's going to be technical. It's not, you might get a nice little pop here. Like this looks really great. Nice 30-cent move on it. That'd pay really great on a contract. However, that's another one of the bonuses of trading in the money. Some sideways chop in the afternoon doesn't do anything to your trade plan. It's not going to beat up the contract super bad. Nothing like a spike, like you hold a SPY contract through an hour and a half of chop and that thing's going to get beat up. Pfizer going to do much better on an in the money contract. Yeah, so JC, you're talking about trading KO. So that is something that I want to point out. And I forgot to point out, I should have done much earlier. When you are trading these, you cannot, I repeat, cannot market order into them. They have relatively low volume, relatively low open interest. You're typically going to be talking on those at the money contracts, 500, 1,000 volume on the day, sometimes up to 2,000. And then open interest is going to be in that 2,000 to 4,000 range on most of them. So because of that, that increases the spread on the contract. Like I'm looking at the in the money KOs right now, the bid ask spread is 53 to 58. Well, if you market in, you are getting filled at 58. If you limit in, you're probably getting in at 53, 54. So the person who markets in at 58 is already down, basically 10%, whereas you are sitting at break even. So you always want to treat these with limit orders. You also want to use that to your advantage on when you're selling. Say you enter at 53, set the sell at 60. So for the poor sap who does market order in, you get filled. So you always want to be conscious of that bid-ask spread. Also, because of that, when you set a stop loss is generally going to be based on a market order. So if you set a stop, the second that a contract trades at that tick, it will fill you at the next one. So even if only one person got filled there, you can get stopped out when you don't want to get stopped out. And so that's KO. Like I said, another one really got my eyes on going into the week. Look for a breakout, or if we get an attempted breakout and a failure, look to short it back down to the bottom of that range. This $1.20 range has been an absolute print fest on KO. So something that everybody should have their eyes on. How do you do a stop loss on something like KO? You do, to some extent, have to watch the trade. It's because of how those contracts move and because of that smaller or that spread on them, you sort of just want to watch it. And if the price action tells you, we kind of saw it, I guess it was better on T this morning. But if you're watching something like this and you're getting in looking for that breakout, then you really need to just not get faked out by these wiki candles. Wait until you get a confirmed breakout and then just place your limit order at the price to try to get out. You might have to bump it down $1. So maybe what your planned $4 risk will turn into a $5 risk. But because of how they move, even having to move those limit orders, you really shouldn't be affected too much. I know I'm typically not when I'm trading them. Okay, so we've done AT&T, Pfizer, Coca-Cola, three of my favorites. The final one that I actually used to trade a lot and I trade less of now, and going to be the more expensive one of all of them that we talked about. Still a blue chip stock, still low beta, still extremely low IV. You know, you're talking 15% IV, 20% IV, something like that. This is Johnson & Johnson. You know, big time household name, been around forever, huge market cap. They own everything. So just one of those companies that's not really going anywhere. But when I was looking into these, I was actually starting to get a little bit interested. Of course, we got some news that Buffett is selling. However, there's no denying that this is putting in a bit of a bottom. We have what I refer to, Al Brooks refers to as a double bottom, higher low. So, you know, maybe this could be considered a double bottom. It is definitely a higher low. First higher low we've had on this dramatic downtrend going on here. So something that I have my eyes on, looking like it could potentially be a, you know, breaking out of here, breaking above this SMA for the first time, and, you know, breaking above on a strong candle for the first time in 3 months, something like that. Something to have your eyes on. So then we treat it like anything else. We want to set up price targets. I always look for those recent highs, look for any of the recent lows. Obviously got one down here, got some down here. Got another high up here. And then that's a pretty big rejection there. And so when I'm looking at something like Johnson & Johnson, this is one where it makes bigger moves. Today was obviously, you know, Johnson & Johnson is typically not going to move like $3 like it did today. That's a pretty big move on it, contrary to some of these candles recently. However, this is setting up a very, very nice place for us to take a trade. 149.30. Pretty obvious place to be trying to get long on a retest with any sort of stop, probably down here below 149, below the trend. Again, lower beta, cheaper stock. We look at our price targets to try to have realistic targets. Obviously, always want to pay attention to a nice whole number, 150. We happen to be sitting directly below 150 right now. So those 150 calls are about $90. Again, lower volume, lower OI, do not market order. I'm looking at them right now. They got a $20 spread on them. So you want to try to fill that mid around $90 if you can. And then understand you have 48 delta. The delta is going to remain relatively accurate. So we can start to set our price targets. If we either want to get in on the retest here, 70-cent move up is going to pay us, you know, 30% on our contract. Or if we get the full $1.50 move up to here, the 150.85, we're going to be doing a relatively relatively easy 100% on that contract. So it's something I like to do. Playing that, you know, one out of the money contract. However, if you are looking to actually play this as a breakout, maybe you want to have a slightly wider stop. You again need to be conscious of the contracts that you're picking. So on Johnson & Johnson, when we break 150, that is when the strikes start to get funky again. They go to, you know, 250 increments. So you need to look at that and say 150, the next strike up is 152.50. Do we think we can get the $2.50 move? And when we look at this chart, and we look where we're playing the breakout from, and we look at this high back here, and we can say, hey, that's the final target, which in my opinion still means that it is a reasonable strike to go for those 152.50s. I wouldn't be going 155s. I wouldn't go 157.50, but those next week 152.50s to try to catch the whole breakout if it comes can be a very, very nice, like, low dollar risk at $55 basically, for a potential very nice multiplier, even though it's only a $2 move. You know, these contracts move very different compared to something like, you know, your Amazons, your Microsofts, your Teslas. You know, a $2 move on a Tesla contract is going to pay you nice, but it's going to pay you 20%. A $2 move on, or, you know, 20 to 30%. A $2 move on something like Johnson & Johnson, where you go from out of the money to at the money, is going to pay you 200-300%, something like that. So very low risk. Your stop's going to be, down here risking, at least according to the Delta, if you were playing the next week 58s and you were getting a 40-cent drop, you would be risking about $14 on that contract, give or take, of your $50 contract. For a potential, a very nice move to the upside. So Johnson & Johnson, one that if you aren't super comfortable with the slower movers, you don't love how AT&T or Coca-Cola or Pfizer move, and you do want something that puts in some more direct moves throughout the day. You can play these levels, you can play these bounces, and you'll get a move in a timely manner. That's going to be Johnson & Johnson, going to be a great option just because it's trading at $150. It's much easier to move something from 149 to 150 than it is 15 to 16, obviously. So this is the last one I'm going to talk about, unless we have some. I'm hoping we're going to have some requests after this. Hopefully people like the boomer stocks. They're nice, they're simple to trade, they're very low risk, they're slow movers, they will give a very nice reward when played properly. You obviously don't want to just be diving in no man's land, but you come down to some of these strong supports, trade them. It's a great way to do it. Right on, JC. Yeah, the stop losses can get a little tricky on that. Shortcut to click the levels with one click. There isn't one. I click twice real fast. That's all I do, Empanada. UPS. Yeah, I don't remember what your trade even was on that, though. I never trade this thing. You can see, I don't even look at UPS. Oh, somewhere down here, though, you like bottom ticked it. Oh, yeah, we'll hit Ford after this one, too. INTC. Yeah, Rev, you did like bottom tick this down here. I swear that was it last week. Wow. Yeah, you wish you were still on them things, huh? Who would have thought it just blast SMA to SMA, though? You can never ever expect that. Ford. Let's do a new one. Love trading Ford. Another blue chip stock. Wow, look at that. That's a pretty interesting little situation it's got going on right here, huh? Very similar setup to a lot of these boomer stocks right now. Wow, Ford actually probably offering a great trade. Basically, like no risk on this thing. I mean, if this thing retests that 1020 tomorrow, I will definitely be getting into Ford. I'll tell you that much. If we can get down here, this will offer, and I just to reiterate everything I've been teaching, I'll be in 10 calls, I mean, if I'm gonna, I would likely buy at least next week's on them. Could be this week if we think we're going to get a breakout, but it's Thanksgiving. You don't really want to plan on that. But man, some of those next week 10 calls, if they pull them back to down here, they'll probably only be like $20 and give you 50 delta on it. So if you can get a 30-40 cent move up and attempt some of these upper levels again, Ford could be a real nice one. So looking like on the weekly. Yeah. God, and above that 1050, we should finally start to see a move up on it. But that thing's just throttled. Bad earnings out of it. Yeah, nice one, Empanada. I like Ford there. When trading these, I tend to go further out in time. So it depends. It 100% depends on how fast do I think the move is coming. One we can go back and talk about. Let's see. So this was a hilarious. I alerted some AT&T calls like right here, right before it got throttled. But I told people buy some time on it, and so I gave a couple options on different contracts. And at one point it was the October 10s, and then some of them January or October 14s, and then some January 14s. And you can see this got super ugly for 2 days. And then those contracts have basically been green. From 2 days on. So I was looking for a move up on AT&T. I unfortunately didn't hold them. Did catch, I ended up getting out somewhere, I think even on this pop, maybe on this pop. So held them for a little while. But you can always buy time because it's cheap. That's the advantage to it. If you are looking for a longer term breakout, you can get 3 months of time, 4 months of time for $100. So even if you aren't right away, as long as you're trading these safe blue chip stocks, and you still have to obviously have a stop in place, but you can start to more comfortably hold them for a little bit longer, because buying time is so cheap. Retail stocks like Walmart and Target, they're also considered blue chip stocks, but the problem is the sector. Like, you might trade Walmart because it's a boomer stock and you think it's super safe, and then you get throttled for 20% or whatever it is, 10%. So you want to be careful. Back in these days, very controlled trading on them. Even like when you look at these like long-term charts on these, like this is more blue chip, boomer stock movement. This is realistic. Obviously, terrible earnings here and there, but this is more realistic. The problem is those retail names, like, I mean, look at Target. Like, Target has just been wild, So they are blue chip stocks, theoretically. However, they have a disgusting amount more risk than your average blue chip stock or boomer stock does these days. So be really careful on them. Chewy, not a blue chip stock, even remotely, far from safe. But nice cheap one to trade. Oh, and actually, I mean, looking like a lot of things are right now, consolidation waiting. Pretty easy range to trade right here on Chewy. Obviously, calls off a 20 have been working repeatedly, targeting up to that 2150. Break above there, that thing could get to moving. But for right now, completely range bound. No, don't get bullish up here and don't get bearish down here. Wait for those confirmed breaks and you'll be good. Yeah, I know, 1K. You were the most, dude. You were even more bullish on AT&T than me. That was wild. You held them things, and it did it. You've been telling me T to 16 for 3 months now, and it finally done did it last week for us. And now we're looking nice, man. I'd sure love to see that thing get over the 200 and get running again. Yeah, Rev, I would actually completely agree. Trade travel names, trade Win, another great one. It does not qualify as a blue chip stock in my mind or boomer stock in my mind, but Win, a really great one to trade. American Airlines, great one to trade. Delta Airlines, great one to trade. You can see all of these in that, $10 to $50 range. Really easy trades, really safe trades. If anybody doesn't know Jets, this is kind of the travel or travel ETF basically. Jets put in that really nice move off those lows. I'm feeling like I'm chasing the travel trade, but we're seeing a lot of people are starting to want to buy travel again. So definitely both American Airlines, Delta Airlines, all of those, something to have your eyes on. Carnival Cruise, Walmart to 160. Let's go back and look at it. Let's see what Walmart's gonna do. I mean, I wouldn't be like long on it here personally. I would be long on it right there, 153. Might miss it, waiting for it, but not something I wouldn't long this right now personally. Pull this thing down to 153 though, and I would definitely get into some calls with the stop below. Probably 150 or 154, I guess. Stop below 153 to see, because things don't sit under the 200 too long typically. They either completely die or they bounce back real fast. INTC, my girl wants to see it, huh? Wow. I hadn't looked at it in a while. Apparently. Wow. Well, I mean, not where I would get long, but weekly 200 coming up. That is huge. Above that weekly 200, that is where I would start to be looking long again. Hopefully you're long already, but not like where I would have been personally swinging long or anything like that. But what a move on INTC. Wow. Yeah, but not where I'd be getting long. I must be looking to short this thing off of 45. Or maybe just blast over it. I mean, NVIDIA could be the catalyst to send this thing absolutely flying. But look at that move on it. Jeez Louise. I mean, that thing is up gigantic. That thing is up 39% in a month. That is insanity to me. Yeah, exactly, Rev. Looking for that 45. If it gets over that, I mean, Nvidia could be the catalyst. Could be an excellent sympathy to Nvidia. Yeah, MGM trying. Ugly little SMA cross though. That's interesting. Let's see if the SMA just decides to do the little J hook off of it and go. That'd be some nice confirmation to see if it wants to keep going. Yeah, well, nice retest on that 200. Oh, that's the 4 hour. Yeah, I mean, if this thing does want to go, 42.22 going to be that likely target. Well, 41.30, then 42.22, definitely the likely target on it. Yeah, MGM. Yeah, apparently they had really good earnings last month. I mean, I forgot about it. I kind of remember Tilio mentioning that, but like, golly, that thing is just insane. I mean, so from the 20s, yeah, man, 1 month, that is just wild. That is just impressive. Yeah, wow. ER must have been sweet. I love it when they sell an ER right down to that 200. I bet people were piled in short on that thing for it to just rip faces. Yeah, I'll definitely be playing NVIDIA by way of QQQ myself, see if we can get that released before the last 15 minutes. But if not, I'll probably take a cheapy bet on it one way or the other. Okay, well, that's it for boomer stocks. Hope people learned something. Nice, safe trades, easy trades, low risk, high reward. Can be real fun. Not going to give you your, 400% Tesla or NVIDIA candles, but can pay you real nice if you play them right. And if there's no more questions, thank you everyone for coming. I really appreciate it. It was a fun class. These are things I like to trade, not necessarily for everybody, but definitely something to keep in the back pocket if you can. Yeah, Red on Empanada. Nice to see you here, man. Yeah, thanks everyone. Thank you. Thank you all. Okay, well, everybody, you have a great night and we will see you all tomorrow. Yeah, class on Webull tomorrow. Yeah, how to delete the app. It's I'm gonna guest host with 1K and say here's how to remove it from your phone. Just kidding. Everybody have a great night. We'll see you tomorrow.